So in the last 3 months, I put $3,800 on the line and all I made was, drum rolls, just a measly 3.57%. Might as well have put that into mutual funds or something. The pain it's real. But here's the difference. I'm not running away from it. I know exactly where I went wrong because of this post-analysis framework which I saw online to study my own trades, my mistakes and myself, and also to get a true insight on how to improve and find that edge for yourself. And in this video, I'm going to break that post-analysis framework for you. And I'm also going to share some of my biggest mistakes, my top losers from last quarter, so you guys don't make the same mistakes that I did. This is like the mirror of shame that every trader must face if they want to get better. So lots of value out here, and just please stick with me till the end. So why even bother with the post-analysis framework? Because as I mentioned earlier, that is where you're going to get real insight on how to improve and find your true edge. Like for example, I was doing my own post-analysis work and I found out that out of 76 trades, there were only 3 trades which were actually the reason to kill my edge and my ROI completely. Only 3 trades. Out of 76 trades, only 3 mistakes. And now you can imagine how these little things can cost you. And I'm going to show you exactly these 3 mistakes as well. But first, how do you actually do the post-analysis of your trades? So after each trading period, you just don't move on. You go back to your Excel sheet or wherever you've written your trades, or if you have a broker, I'm pretty sure every broker now has like a downloadable statement. Sort your trades out there by returns and really look at them. So what you got to look out here is basically your top 5 winners and your bottom 10 losers. For each one, then you got to pull up your chart, mark up your entry and exit, note your setup, write your reasoning, your position size, your plan, your risk, and then grade yourself on that. Where did you execute well? Where did you mess up? Note all of this down. And while you're doing these, track your key metrics, which is your batting average, your average gain versus loss, your risk to reward, max gain and loss, even how long you held your winners versus your losers. See, I do this simply by just doing it on the side of my Excel sheet. And this doesn't have to be complicated. It has to be very simple. The point is, after you do this, the patterns start to show up. Maybe all your big losses came from just one type of setup. Maybe your average winner is trending higher and you could have held it longer. Or maybe it was falling and you could have just tightened and trailed your stop losses. Like one of my losers has that. Like I had to tighten the stop losses. And that's exactly your feedback loop. And your trading rules, think of them as a contract with yourself. Write down, clear, detailed enough that another trader could follow them step by step. They'll cover everything: market analysis, setups, entries, exits, risks, risk management, position sizing, and even contingency plans. And here's the key: you can build them over regularly based on what your post-analysis is teaching you. It's hard at the start, but as time passes, it gets easier and easier. And you get to reinforce your learnings and your knowledge back into your brain. So that's it. Simple, powerful. Just commit to this framework and the answers will reveal themselves in your own trades. I still can't believe just 3 trades killed me. So let's study my losers. And though the discussed stocks are Indian stocks, the same pattern actually applies to all the stocks in the world. For all the international viewers from around the world that I have on my channel, don't focus on the names, just focus on the pattern and the chart. So first one was IDFC First Bank. Simple breakout, looked fine, but I played too conservatively because of these tiny candles. So because of this, I could not add at the highs and I could not be allocated more, which resulted in weaker allocation. And then I missed this momentum. And honestly, if I had hunted this stock earlier, I could have captured a nice big move and a nice big return on this. You see, you don't need 100 winners. You just need 1 or 2 winners like this that can completely change the face of your account. So the lesson learned out here is when the momentum is there, allocate fast, scale faster, hunt early so you can pounce early, and don't tiptoe and add peanuts when the move is real. Second trade, Angel One. My entry was too late out here. I was late. I was very late to the party. And that's it. I was not alert enough. The truth is, I find stock hunting boring sometimes. But that's like a lion saying, oh, hunting is too much work today. And this shouldn't be the case. I need to flip that mindset. I shouldn't be finding hunting boring. I should be thinking like, wow, I'm hunting for some treasure today, not data entry. Also, I missed a clear re-entry out here on the support levels. Lesson learned, be excited about the hunt. Winners don't fall into your lap. So build that habit, not just the hype. Then comes SML. And here, this was another stupid thing. It was a missed trade because I got shaken out and I did not re-enter again, which is like a classic rookie mistake. You know, when you have the conviction, re-enter. And I completely missed that big juicy move. The lesson learned, don't be afraid of whipsaws. If the setup's valid again, re-enter like a pro and not sulk like a tourist. Then comes ITDC. This also I did not scale up when the breakout came. Those pinbar candles, they scared the living shit out of me. I thought there's weakness out here. And being too cautious cost me. So lesson learned, don't be scared of these pinbar candles. If there's a new high, add to it. Add confidently but carefully. And for God's sake, hunt every day. You can't show up late to a party and expect free drinks. Just a little side note, there's this trader Dan Zanger, which I'm going to cover in my next video. He made $42 million in just 23 months using a capital of only $10,000. And there was something which I read in his interview. He hunts stocks every single day. Meanwhile, I am scanning here like it's some chore which I have to do. So yeah, gotta change that mindset. Now let's come to my 3 biggest losers. The first one is IEX. I was not late at the party this time, but it was the wrong party. A full-on poop party. A big red candle with massive volume appeared just some days after I had entered in. And I should have woken up. I saw the signs of weakness. I saw the big selling volume come in earlier as well. I should have tightened stop losses. I should have done something. Instead, I gave it too much freedom and the loss ballooned. For this one, I did not even have like a stop loss set. I had like a mental stop loss set. And there's a saying in business and in the stock market that subtract before you can even add. Meaning, think of losses and protection before you can even think of profits. The less you lose, the faster you grow. This big red candle was a single ROI killer for me. 30%, more than 30% or something. And why I keep saying factor in your losses beforehand? Because look at this image out here. The deeper your losses go, the harder it is for you to come back to break even. Like out here, you can see when you lose 30%, it takes you 43% to get back. Lose 50, 60%, it's going to take you 100 and 150% to get back. So it's going to take twice the effort, and more deeper the losses, the more effort it's going to take to get your account back to break even, and then you can start profiting. Next trade, APL Apollo. I was early to this party. Nice. I was also allocated well. Nice. The company was good, at least I thought I was convinced with it, and I got overconfident. I never stepped a stop loss out here again, mental stop loss, and the market fell and I went down with it. But lost all my gains as well, and I also booked some losses. So lesson which was learned out here was never let your gains turn into losses. And good company doesn't equal like the trade is going to be good, that it's always going to move up. If you see some profits and if you think that you have to trail your stop losses, go for it. You book some profit and keep that money rolling into your next trades. Another example, another mistake. This was solar industry. Look at this chart, beautiful chart. Everyone craves for charts like this. Smooth lines, smooth candles. And I was allocated well out here as well. And then afterwards, red candles everywhere, non-stop. Again, I was profitable out here and I could have saved this only and only if I checked the lower time frames. When it broke that 10, 20 and 50 MAs so effortlessly, that was actually the correct time to just exit from that trade. I wouldn't have booked a loss and I would have gotten out with profits as well. And this is something I learned from a video I did on how JLaw uses moving averages, on how he sells into strength by using his moving averages. And JLaw is a 2-time US investing champion with triple-digit returns. So if you guys are interested, please do watch that video as well. It's really valuable. I'm going to add the link out here and do check it out. So the lesson learned out here was when the trend cracks, get out and get out fast. Save the profits before the market eats them. And these 3 trades were enough to kill all my ROI and give me a very measly return. So out of 70 trades, if just these 3 mistakes were well taken care of, the ROI would have been through the roof and my portfolio would be glowing right now. Another thing, there were multiple trades where I was too late to the party, and the lesson of course out here is to scan regularly. I've mentioned this before as well. Scan regularly, daily if possible. And if I would have just done that, the market would have definitely rewarded my hunting. There's one last stock I want to discuss, which was Cupid. I tightened my stop loss on this hammer candle which I saw and I got shaken out. But here the thing is, I was barely allocated in this. So the lesson which I want to actually give out here, that if your allocation is small, then don't trail your stop losses just because you've seen like an inverted hammer candle. Just give a breathing space for the trade to either continue or either to fall down, like either to just get your stop loss. If it gets your stop loss, it's going to be a very small loss. If it continues further, then you get another opportunity to add to it and allocate better so you can capture a bigger move. Like if it's a small allocation, don't trail your stop loss and just come out of the trade early. So just like a quick review and big takeaways from all my mistakes. So the first one is allocate aggressively if your conviction is high. Second one, lock in your gains early. Don't turn your profits into regrets. The third one is always keep setting these alerts on key support levels or key breakout levels, because this is going to help you in smart re-entries. Fourth one is do your research. Like, there are many companies that I did not even know the insides of what is happening, and still I took them. Fundamentals and technicals go hand in hand. And if you haven't read the fundamentals, if you haven't researched about the company, your conviction is not going to be high. And you're just going to try and capture that move because someone has done your homework. Kind of how you become stagnant at your skill set then. So if you don't know the company, don't touch it. The fifth one is keep fewer positions. Focus actually beats FOMO. So just keep the positions small so that you're more clear in your head and you're able to manage them properly. The sixth one is very important, which is journal monthly. Like, forget the whole quarterly thing which I'm doing. I think I should just start doing these monthly things. I get to get a deeper insight on what is going wrong and what has to be improved. The seventh one is less is more. You don't need 100 good trades. You just need to manage your trades and just avoid 2-3 mistakes that, I did. Honestly, it's not even about winners. Even if you manage your losers properly, you're good. So I hope the next quarter is better. I hope I don't make these mistakes again. And I hope I dance only at the right parties and not at stupid bad poop parties. IEX. So I hope you found this post-analysis framework useful. So go hunt, go win, and hey, subscribe to my channel, because making these videos actually take longer than holding through painful drawdowns, and I'm also giving you my hunting time.